Good morning, everyone, and welcome to today's webinar all about the MGA market, hosted by Insurance Times and in association with Unitary. For those of you who don't know me, my name is Katie Scott and I'm Content Director at Insurance Times. I'm absolutely thrilled to be chairing today's discussion. So over the course of the next hour, a powerhouse roster of MGA market experts will be digging into the influences and nuances affecting MGAs today, talking through how these businesses can tackle market-wide challenges head-on in order to deliver growth and profitability. This conversation will be supported with relevant and up-to-date statistics from Insurance Times' most recent 5-star rating report, which covers the MGA market, published at the end of last year. So I'm just going to take a bit of time to introduce my lovely panelists this morning. So we have Mike Keating, who is the Chief Executive at the Managing General Agents Association, although I think most of the market know you already, Mike. We've got the lovely Jamie Swindle, Chief Executive at Geo Underwriting, Sasha Heiko, Chief Executive at Unitary, and of course we have the lovely Savan Shah, who is Head of Research over at Insurance Times. So welcome everyone, thank you so much for joining me this morning. Before I get the ball rolling with some questions at our lovely panel, just a reminder to all of you watching at home that if you want to ask the panel any questions yourselves, please do feel free to use the Q&A function that should be at the bottom of your screens. If you want to type a few questions out, if you have anything to ask, we'll make sure to save a bit of time at the end to get round to them. Lovely. So to kick off today's conversation, I really wanted to dig into the soft market conditions that UKGI is experiencing at the moment, and particularly how they are specifically impacting MGAs. I don't know if anyone has a view to kick us off in terms of how MGAs in particular are weathering this particular cycle.
Yeah, just
Mike,
to give you
start or Sav? Oh yeah, perfect.
just wanted to give some context. Of course, we asked this question to brokers in the annual MGA survey. We had over 1,700 brokers take part, so a good kind of indication of how the market is feeling. So when we asked this question to brokers, we found that 55% felt that we are currently in a soft market, and 30% felt we were in a neutral market. 8% felt they're in a hard market, and 7% were kind of uncertain. So the large majority, feel that we're in a soft market. So it really, really tells you what brokers are feeling at the moment.
Definitely.
I mean, I'm happy to jump in here. So I think really interesting. I'd like to see where that 30% are playing at the moment, because that's certainly not what we're experiencing across our MGA. So look, I think from our perspective, the soft markets have a way of bringing to light both your strengths and weaknesses in real time. So I think it's definitely a time where our discipline is being tested swiftly and without forgiveness. So I think the key bit for us, and sort of how MGAs are weathering the soft market, I don't think it is just about weathering the cycle. I think it's about sort of staying committed to what truly defines you as an MGA. So we're really lucky in Geo, which is we've got a broad discipline of products that we work to, and that sort of portfolio approach I think helps us to navigate the storm, because where some of our areas are probably having more price pressures, other areas are probably maintaining a slightly stronger rate that sits there. But I think one of the things that the soft market is doing, certainly for us, is making sure that our principles and our core principles are being tested, and sometimes having to say no more than we'd like, trying to avoid any of those short-term gains. So look, I think the key bit, regardless of the sort of market cycle when it comes to MGAs, is always being incredibly clear about where you play, doubling down on your underwriting quality, genuinely being tighter and sometimes more demanding of your capacity partners, but not just chasing volume, which I think is potentially a risk in this market cycle just because it's available. It's a bit of a reminder to all of us that growth is good, but only if it's profitable and sustainable.
Yeah, I'd echo that. I think MGAs will navigate it, using that discipline and working with their capital, and hopefully the market will be shallow rather than deep. I think sort of various tools which MGAs are very agile at using. So you're looking at real forensic distribution focus, so leaning into their brokers, really understand the broker's portfolio, doing renewals earlier, get the renewals earlier. Again, another tool which can really sort of take some of the sting out of a sort of a hard market. And actually sort of the level of service, is absolutely unsurpassed from MGA. So, if you take a step back and you look at brokers are under enormous pressure from their customers, the end customer, then the fact of what they need is reliability, and they need to have a real sort of sense of level of service and access to decision makers. And that's where MGAs sort of over the last sort of 5 years and beyond have really excelled. And if MGAs are doing that, then they'll be able to navigate their way through. I think one of the other areas which MGAs, when you look about where they will suffer slightly, and this is always quite an interesting, maybe controversial, is where insurers expand their risk appetite in a soft market, and effectively may actually start going into areas which MGAs are specialist and niche in. And that's actually just the drive to actually trade effectively in a soft market. Obviously, the challenge on that is that when the market switches, will those insurers still be in that particular space, or will they then move from that space and leave that to MGAs? So, I don't need to sort of preach to brokers because they're experts, but they need to look at their markets, and what behaviours have been done in a softening market, and whether that's going to be consistent when that market changes.
Yeah, I mean, I think we've talked about this a few times, haven't we, Mike? Which the sort of the pressure that comes from our capacity partners that are also looking to grow in that soft market does mean that they probably are increasing their appetite, and it does sometimes bleed into some of those specialisms. So I think it does really sort of bring home the fact that being very, very clear about the benefits that you are giving as an MJ is super important, but also ensuring that you are, or certainly we try and make sure that we're playing in areas that complement our capacity providers as opposed to sort of conflict with them. But you're absolutely right, Mike. We do find that, funnily enough, nobody wants to write roofers and scaffolders until the market gets soft, and then all of a sudden everybody likes them high and likes them going down deep. And then in 18 months' time, it's a very different story. So it is about having that kind of consistency. It's about making sure that you're really clear about what that looks like and working with the right partners, both from a broking point of view and a capacity perspective.
No, that's such an interesting take on it. I sort of hadn't considered that point of view before, but it makes perfect sense the way you've explained it. Would you say then, broadly speaking, that MGAs are they resilient when it comes to the soft market, or are they more challenging, I guess, for MGAs where they've got this perhaps friction?
I suppose I'm speaking to sort of our 250 sort of plus members. I think they would say they're particularly resilient, and a lot of it is around how well they know their brokers and the brokers' portfolio, and all this and the tools I've sort of just described. At the end of the day, no one in the market is insulated from reducing prices and increased competition. So come to Jamie's point, it's clearly in terms of how strong is your proposition to your brokers, based from service right through to sort of, dynamic pricing from that perspective. How loyal are your broker distribution to you as an MGA? Have you got that sort of particular relationship? And if you have those two areas and you're trading, I mean real trading as an MGA in terms of, access to decision makers and your underwriters, then you should be able to show that resilience. But effectively, no one in the sector is effectively insulated in terms of when you've got, reducing rate environment.
Yeah, definitely.
Yeah, just wanted to just to add to that, and that resilience kind of shows kind of each year within the research that we do. So in one question we always ask brokers, and of course we try and contact and invite brokers across the country, to take part. So we're not aware of their kind of activity with MGAs or their involvement, but what we found was, out of the nearly 1,700 brokers that took part, 96% said that MGAs form a strategic part of their overall placement strategy. And over the years, this particular question has just increased. So this year it's 96. Last year, I believe it was kind of 94, but each year it keeps kind of increasing. So it just shows how important MGAs are to brokers across the nation.
Yeah, no, it's good to get that sort of statistical evidence to back it up. Definitely.
And I think that's probably come from, I guess, more professionalism in the industry, and I think a real understanding of how MGAs are playing a really important part there. So it stopped being a sort of market of last resort when your primary markets have said no to something. You'll go to an MGA, to businesses that not just mine, but businesses that we see across the board, which have very clear narrative, really disciplined underwriting, really good capacity sort of providers that sit behind them and are there to make a difference to brokers, as opposed to sort of boom and bust, where we've probably seen sort of a long time ago. And organisations like the MGA, I think, are also really, really important in that. So I think it is fair to say that MGAs are resilient. I think one of the things that MGA say is like agility is the MGA superpower, which is great because it means you can probably move and take advantage of market conditions more quickly, because there are fewer sort of infrastructure issues or broader sort of sign-off issues if you're having to go to sort of different parts of the globe to get things signed off and approved in quick succession. But none of that is a superpower unless you've got proper discipline, the trusting relationships that Mike alluded to, and actual data that sort of sits behind it to make sure that the decisions that you're making are the right decisions at the right time.
Yeah, definitely. It makes perfect sense. And Mike, I wanted to circle back to something that you mentioned ahead of the webinar, actually, around profitability in soft market conditions. And you were speaking about the claims in particular and how this can be a lever that can be used to obtain more profitability in these slightly tougher market conditions. I was just wondering whether you could explain this a little bit more for us.
Yeah, I suppose, and let's not all of us get into a massive doom loop here in terms of that, you can, if you look at, soft market conditions, and you can see by the colour of my hair, I've sort of been in many of these cycles. There are certain things you can only slow down, which is going to reduce margin in terms of, how can you slow rate down? How can you actually sort of, keep some rate redundancy in your renewals? But ultimately, you're only being able to slow that down. But if you look at the claims ecosystem, you can actually, if you're doing that effectively and efficiently, you can add margin in. So you can add margin back into profitability in terms of, focusing on the whole claims process, and that will be reducing cycle times, increasing fraud detection, indemnity sort of mitigation, whilst all ensuring you deliver, the right customer outcomes. But it is only in that claims system where, in a softening market, you can actually have a lever to put profitability back in, and that's where I'd always encourage, sort of the claims MGA sort of ecosystem with, carrier, MGA and TPA, over 90% of our members outsource to a TPA, to really make sure that you're kicking every single part of the process and those tires in a softening market, because there is an opportunity, as I say, to put margin back in from a profitability perspective in terms of best-in-class claims delivery. By all means, continue to slow down the other aspects like sort of rate reductions and whatever, but claims is a real area of opportunity if you get it right.
On the
Definitely. Jamie, do you have a view? Oh, Sasha, do you have a view on that?
Oh yeah, I was just going to say that on the Unitary side, we're really seeing that sort of partly, of course, as you might say, Mike, sort of on the claim side, it's really important, but also there's an importance in sort of streamlining operations and trying to take leakage out of the system, because there's sort of only so much you can do to, really slow road evasion. But if you can remove waste, make sure the whole organization is sort of focused on what's important, the relationships, the being, as Jamie said, sort of focusing on what you're actually really good at, and making sure that you articulate that and stick to your values, then you could and sort of get rid of all of the waste and the extra stuff slowing you down. That feels more important than ever.
Yeah, I mean, it's going to be difficult to disagree, I think, with lots of the things that the panel are saying. So absolutely agree that in the soft market, claims is a battleground. Pricing is naturally under pressure. So, what's left is how you're managing your costs, both that claims costs and operational costs, as Sasha said. So there's the point that you made there, Mike, I think is really important though, because I think that the sort of the claims process across MGAs is so varied. So some are insourced with capacity providers, some are outsourced with third-party administrators, some are actually in-house claims. And I think there's a tendency, probably if it's outsourced, whether that be to the capacity provider or to TPAs, that probably it just sort of happens. So there's an expectation of service and there's an expectation of ensuring good customer outcomes and the regulatory aspect of it. But actually probably the focus on the cost and the leakage and all of those other parts that you alluded to, Mike, probably aren't necessarily at the forefront of minds when it's outsourced. Definitely more so when you've got delegated claims handling authority. So I think there probably is an absolute piece there, which is understanding that process end to end, understanding where there may be opportunities to, at the front end, mitigate those losses, being really clear about your underwriting discipline. But it all comes back to data, I think. So, you said sort of claims control is a lever. I'd say that the data is the hand that pulls that lever, and understanding where all of that sits, both from both from an in-source and an outsource perspective, but not forgetting the operational aspect that sits across the middle of it all.
Definitely great image there with the data as the hand that pulls the lever. Love that. I wanted to sort of circle back a little bit as well in terms of, I think, Mike, you mentioned a little earlier about that proper trading relationship between brokers and MGAs. I just wanted to get the panel's take really on how this has perhaps evolved over recent months in terms of the strengths and weaknesses of these relationships, perhaps the key differences between that broker partnership with MGAs versus what you're seeing with their relationships with insurers.
You want to pick that one up first, Jamie? You're the coal face.
So look, I'd say broker relationships are still really, really strong, and actually getting stronger and stronger. So I think we alluded earlier, and Savan, you used the stats around MGAs becoming a strategic part of broker placement as opposed to a sort of necessary part of broker placement. And we are definitely seeing that, being invited to participate in more sort of panel tenders and actually being recognised as somebody that complements alongside the broader sort of primary strategic relationships that sit there. But I do think that relationship is evolving. So, ensuring that we are meeting the sort of increased demands and expectation, which, probably sets us in the same playing field as some of the larger primary markets, is very different as an MGA, and actually making sure that we're sort of adhering to those standards or meeting those standards. So things about consistent service levels, making sure that you've got access to decision makers really, really quickly, ensuring that you're really clear about your appetite, because not only are we being compared to insurers in the way that we interact with our brokers, and possibly more so with a higher expectation because we're expected to be more nimble and more agile. People have probably banked the fact that maybe it's a bit slow going through some of the big carriers, but they're also, I think, comparing us to other digital experiences and other sort of service experience they're having, and their clients are having more broadly in their sort of lives as well. So, I think brokers are still absolutely not only backing MGAs, but seeing them as a strategic part of their placement, but they expect definitely more from us than they ever have before. It's it's not a case of I know they can do this for me. It's I expect them to do more than probably have done previously.
I think I would add sort of, I wouldn't necessarily call it a weakness, but I would encourage MGAs, because this has been picked up in both the latest Insurance Times survey and the one previously, that there is a demand from brokers for MGAs to be a little bit more transparent around their capital and the tenure of their agreement with the capital. And I think that's probably the one area, when I talk to our members and insurers and brokers, it's the one area which I think MGAs can actually close that gap and even cement that relationship even more. So that if you are confident in the capital which you are binding on behalf and you've got a good tenure, then I think that really helps the broker to understand and give even greater confidence to the end customer. And that's something, as I say, which Savi's survey has highlighted, that brokers are sort of desperately asking for MGAs to be a bit more transparent in that way. So I think in terms of that MGA broker community partnership approach, if more MGAs just fill that gap, then I think it even takes that relationship even further forward.
Yeah, just to add to that, and of course, within the MGA survey, we try and look at a lot of kind of future-facing questions, and one of the questions that we asked this year was looking ahead. What would most enhance your partnership with MGAs in the kind of evolving market? And the top three answers that were selected were specialized niche products. So, of course, many of what MGAs are currently still are doing, but there are areas that also are wanted. So, in kind of second place was better digital platforms or embedded solutions, and the third highest choice was greater tech adoption. So, a lot of the areas that we're talking about today, not just about what MGAs are working really well in, but also the areas that brokers want for the future to keep evolving that relationship. And just to touch upon one area that we did also investigate within the surveys is simply asking the brokers whether they felt MGAs performed better than insurers in certain areas. So what we found was that MGAs outperform insurers on speed, ease of access, flexibility, and relationships. But the weak spot is, of course, the claims perception, which, of course, is handled many times from the kind of insurer's perspective. But to kind of bring the attention to that as well, I was just looking through some of the kind of broker concerns that brokers put forward in the MGA survey, and something that we were just talking about was around the kind of claims handling. And one of the comments that stood out was from a broker, I believe situated in the London region. When MGAs tie up with insurers, they must ensure the claims handling arrangements are up to scratch. Often, the more fringe insurers used by MGAs will outsource claims handling. And then the broker goes on to say all about all the kind of issues that they're having, the communication issues, the complaints being made, and of course, thinking twice whether to work with that particular MGA going forward in the future. So, these critical areas are so important to focus on.
Yeah, so some of those stats you raised there, Sav, are so interesting. Particularly, you were saying about brokers wanting MGAs to perhaps get a bit more digitally savvy in terms of tech platforms and adoption. And it's such an interesting piece to explore, because I think it was you, Jamie, that mentioned that there is this perception of MGAs being incredibly nimble, very agile, and obviously a lot of that can be fueled by technology, artificial intelligence, etc. So yeah, just wanted to ask you guys really, where do you think MGAs are really sitting on that digital transformation roadmap when it comes to their implementation and utilization of AI, artificial intelligence, and the machine learning, those different types of tools that are hitting the market? Because obviously there's been so many that are sort of coming to fruition, and every part of the market sort of almost a bit of an arms race, I guess, to try and get different tools embedded in their businesses. So just keen to hear your thoughts on where the technology is most impactful for MGAs, but also are they ahead of the curve, behind the curve? What's your take on it all?
From my point of view, we're really seeing MGAs at like very, very different stages along that journey. So some are sort of really just experimenting with AI in very small ways, or very contained use cases like sort of triage or flagging fraud or this sort of thing. And others are really starting to embed sort of technology and AI. I mean, maybe automation rather than just AI, because I think AI is one solution, but there are so many different tools in the toolkit. And I think even though AI is the latest, trendiest thing, there's sort of MGAs at different stages of the whole automation journey. And some, I think, are really pushing the boundaries on getting rid of like all extra unnecessary costs, automating all of the sort of submissions process. So there's a lot to do, there's a lot to play for, but there's a whole range of people at a whole range of different places.
Yeah, I would agree. I think, if I'm being candid, many MGAs aren't quite as digitally sophisticated as they portray on the outside. having sort of acquired a number, having inherited a number when I took over this business, and sort of working alongside a number. So I think there's a couple of parts to it. So as with most businesses, there will be people that are at literally the bleeding edge of technology, and they've started up, and that's very much their modus operandi. And then you've got other businesses which, quite frankly, are still using quote tools and databases for their policy admin system, and everything, every shade in between. I think one of the challenges you've got in this space is technology requires a capital outlay. And actually, if you're finding sort of, startup businesses or businesses that haven't got a huge amount of cash to invest, actually it can be quite prohibitive in terms of that digital transformation. It takes quite a big investment to become digitally enabled, whereas obviously large insurance companies will have an investment case, an investment portfolio that they would be putting into it. What we are seeing, though, I think, are more accessible tools that are allowing MGAs to take advantage of that sort of digital trading in a more cost-effective way, but also more meaningful and not necessarily following the herd. So I think one of the benefits that MGAs have is they don't necessarily need to follow the cycle that all the rest of the market has gone down in terms of the structure of their products, the way that they've built their e-trade platforms, the way they're integrating into software houses, because they are genuinely adding something slightly different to the market, and therefore they should take advantage of the new tech that's there. And to Sasha's point about AI, I mean, that goes from one extreme to the other in terms of what that utilization is. Is it ingestion of data, or is it automated triage and decision making, and again every shade in between? But I would say MJs are no different to many other businesses in terms of the length and breadth of the sort of digital sophistication that sits out there. Their ability and agility tends to come from having quality trading underwriters that are able to pick up the phone, as opposed to, I think, maybe using tools to be more agile and effective.
I think actually, Jamie, that's a really important point on capital. Sort of from what we see at Unitary, it's really important that MGAs can at least get started with their kind of digital and AI journey without needing to sort of fork out the big upfront sort of investment that particularly large carriers can justify with this sort of major transformation projects. But I think the good news is that that is possible, and we're seeing like MGAs starting to take more bite-sized steps to run a proof of concept on something and then get that into production and start with a small bite-sized chunk of automation and get that going. And I think that's something that MGAs have in their favor. As you say, they're known for being a bit more nimble and agile, means they can get started. One other thing I think MGAs struggle with, and actually everyone does, but is that there's such disparate tools and systems. So often that there's this perception, and certainly the bigger carriers are forking out this huge upfront investment to overturn everything all at once, because there's so much. It's not just one system. And how do you begin to automate in a world where you've got 10 different systems, or maybe you've got lots of different MGAs and different businesses, and they all use their own tools and systems. And so being able to start with something small, what does that even look like? And I think that is possible, but that's a real challenge that MGAs are facing.
Yeah, it's really interesting. And Sasha, I'd be keen to get your thoughts actually in terms of how are sort of MJ's really structuring, I guess, this work then, if we're talking about sort of that big capital outlay potentially, because it always seems to be a bit of a strategic toss-up, I guess, between having very fast-paced, quick, small, iterative launches, and then perhaps planning these big, longer-term projects that perhaps include more different elements, but then they take longer to complete. Obviously, there's financial implications there, and then this perception, as we were saying, of MGAs being nimble. What are you kind of seeing in terms of that organisation of digital transformation?
Yeah, we're seeing both. So, and I think it's actually important maybe to do both. So to plan for a long-term big transformation, have a vision for what the business is going to look like in 3 to 5 years from now, but actually to start with something today or as soon as possible. And you don't need to wait for the whole transformation journey to be over before you can start automating something and seeing the benefits. So what we're seeing is that some people actually don't embark on those big, especially the smaller MGAs actually are not embarking on those big transformation projects, but just saying, let's just automate this bit of underwriting or this part of the claims process, or getting data out of emails into a policy admin system, or into a claims system, or whatever that might be. And so that's a small bit you can just get started with. And I personally think that even companies that are embarking on these big transformation projects, it's a mistake to wait until they're done when you can actually start automating things today. So I think that's the important thing. It's like, what is there that you can get started with right away, so you can start seeing ROI and not get left behind? Because I think, especially in these market conditions, it forces everyone to be as agile as possible, to find ways to compete in this market, and being able to sort of move really quickly is really critical.
That's just to add, Sasha, that's really interesting, because of course we looked a great deal at kind of AI in claims in a report that we published previously last year. But of course, one of the kind of findings, not just from that report, but also the MGA report, is being at that crossroads of where the investment should go in. And of course, there's so many areas to target. One of the comments, broker concerns I picked out, kind of sheds light on this, to essentially for kind of MGAs to create that pathway, that digital kind of pathway that can suit their customers, complement what they're kind of already doing. Because of course, many MGAs have great relationship management skills, but this comment was specifically about kind of portals, and the broker came forward to say that they have a concern towards increasing push towards portal-only trading. While the broker understands the efficiency benefits from the MGA perspective, this approach isn't always ideal for brokers or clients, especially when dealing with complex or non-standard risks that require discussion or flexibility. So, that really lends to your point, where it's finding what really works for your MGA and customers.
And I think you have to automate like what's working today. We're seeing actually so many companies start having these sort of portals, and actually they're not adopted. The adoption rate is quite low. So some people, do use them, but then you still get loads of brokers sort of working via email and everything else. And so the question is then, how do you figure out a way to make that process that brokers like really, really fast and efficient? What can you automate from that email submission? And even if, you're going to invest a lot of money into a whole digital platform, be aware that there's no silver bullet. And actually, you're still going to have to deal with all of the other stuff. And so, luckily we're in a world where there are things like AI agents and all sorts of tools that can actually cope with emails and other systems. And how can you make use of that too, so you're not actually sacrificing your broker experience?
Yeah, look, I mean, I think as a CEO, it's something that I grapple with on a daily basis, which is, how do you make sure that you're doing the right things to remain relevant? How are you doing the right things to sort of, improve your customer journey? And how are you doing the right things to improve your colleague journey? So there's a couple of bits, really. So where we're seeing technology and AI being most impactful. So it's around removing that friction, as you talked about. So actually understanding where those friction and those pain points are, and how can we use technology to remove at best or reduce at worst that friction. We're seeing that in terms of automated submissions. So to your point about extranets there, Savan, actually it's less around getting a broker to go onto an extranet and fill out all of the information, but actually using the tools that they're currently using, some still use props, email submissions, data capture, and actually using tools that enable that to be auto-ingested into systems to enable that to be a more effective way of doing it, rather than sort of forcing people to use broker portals. Actually using it for triage, using technology to support with appetite checks up front. So, a yes is great, but a fast no is much more effective, because people don't want to be waiting for that. And all of those things not only kind of help us to be more agile and more consistent, but also kind of gives the balance of, technology isn't replacing the underwriting, it's replacing kind of the waiting that people are having. And I think the other bit to the points that were made as well, and I think about it sort of just in a really simple term, which is you can think really big about technology, but you should really start small, and then you should scale it in a really smart way. So what is the vision that you're trying to achieve, but actually how do you start to look at something in a small proof of concept? How do you realize that value? How do you prove it? And then how do you scale that in a really, really smart way? And it's not just about going in and doing I mean, I feel slightly contradictory because we're going through a massive digital transformation program at the moment, but that's because we've now got to that point where we're ready for it. But actually looking at, what's the end state? What are we really trying to achieve? It's not about, replicating what others do. It's about saying what works for my business, my customers, my colleagues, and how do I improve that and use technology in multiple different ways in order to make that happen, but not realizing that it's got to be all today or all tomorrow. Think big. Start small, scale smart.
I couldn't echo that.
Slogan,
I was listening to that exchange, and I think I've been fortunate enough to sort of, spend some time with sort of, transformational and AI experts, including Sasha more recently since the turn of the year. And I suppose the question's always really for people sort of listen to the webinar is, where you are in your journey. And I think Jamie summed it up quite well, is all the consistent messages from the people who are doing this stuff is, one, make sure first and foremost you know exactly what you're trying to achieve before you get any checkbook out at all. So that if that's mapping your existing processes and then identifying where there's friction, as Jamie and Sasha said. So that's the first thing before you even start, work out what you're trying to achieve. The second thing is clearly start small. Sasha mentioned that to me sort of last week. Really start small. And thirdly, again, that and I think Sasha alluded to it, there are sort of free tools available where you can actually start using, AI and some of those tools, and it's not necessarily a big investment up front. So, for me, those were the key three principles which the experts, and I'm not an expert, have actually been consistent to me in terms of that. Understand what you're doing, start small, and then look to utilize basically, very cost effective or very sort of free tools to actually start experimenting. And then, as Jamie rightly says, then build yourself out from that bit, and probably come to your earlier point, Katie, don't get tempted to go into the arms race because it can be very costly.
Yeah, definitely. I mean, do you guys have any examples of sort of where you've seen MGAs start small with a particular process or a particular function and then scaled it that's been quite successful? What kind of areas perhaps are the most ripe, I guess, to start introducing technology tools?
Well, we have a member, so I know it really picks up on Jamie's point that, and they did sort of inquiry ingestion. Okay, so they effectively said to brokers, don't even worry about what format you need to send us the new business inquiry. We take that completely away from you. We have a system which can ingest it. And then effectively the IA, obviously, which was learning as it went along, effectively triaged that information and presented to his underwriters actually what they needed to actually price and assess the risk. And he shared with me that, and he's been doing it for over 3 years now. He said that the increase in underwriter productivity was over 40%, which probably doesn't surprise anyone actually. But that was one example, which again, you're paying quite rightly, I would add, you're paying very experienced and very professional underwriters to underwrite. You don't want those underwriters having to sort of page turn and go through stuff to get the risk information out. So, that's probably an example everyone would sort of resonate with.
Katie, can I just add something? Just to the points you were making. One of the themes that definitely came out of the last MGA survey, and of course with my conversations with yourself, Mike, and of course other MGAs that were included in the research, is the amount of listening and relationship kind of learning from their broker partners about what really kind of works for them in terms of how they do business kind of together. And that really was made quite clear in a question that we put forward to brokers in the MGA survey, simply asking, what technology improvements would most benefit your MGA interactions? And the top 3 leading factors were real-time underwriting support, faster quote systems, and claims tracking. So really alluding to a lot of the areas that we've talked about today. But it just shows that there's so much more work to do, but understanding from your current customers and then new customers what can work, not just now, but looking ahead in 5 years' time as well, because you have to be ready.
I suppose it'd be interesting in my fellow panels in those top three. And again, I've heard around claims tracking for many, many years. And I know of a number of organisations, insurers who invested very heavily in creating sort of claims tracking. But generally, I found that the usage and traffic in that is very low. So I know it's something, I'm not saying it's not useful, but I suppose would challenge that, I suppose I would say, Sav, yeah, what does claims tracking mean to a broker? Because I think, and credit to insurers, I think they've created this 24/7 claims tracking, but you speak to some insurers and say they get very little traffic, and actually it's actually more telephone based. So I don't know if you've had the same, Jamie, and what perhaps you see, Sasha, on that, but it always appears, but I never see you get the traffic.
Agreed, having been at carriers and other businesses where it sort of comes up top. I think it comes back to what's the root cause, which is there a reason that people want claims tracking digitally because they can't get an answer on the phone or they're not getting the service that they need, and therefore you've got customers that are, I guess, quite rightly demanding an update in terms of where their claims are because it's not being managed in the way that it's not meeting the expectations of how it should be managed. So I think the cause of people wanting that sort of digital claims tracking is probably not because they really want digital claims tracking. It's because the claims aren't really progressing as quickly or in the way that they would expect them to do. And it's a bit of a faff having to pick up the phone to chase where things are. So therefore having the technology there. So I think, coming back to the sort of the key principle that we talked about the whole way through this, which is what is the technology there to do? Is it to enhance the experience or is it there to solve a problem? And either of those things can be right, but let's just make sure that the ask is for the right reasons. And I would probably be more inclined to think that on the claim side, it's more likely to do with the service that's being experienced as opposed to the need for the technology aspect of it. Maybe not so much at FNOL, but I think in other areas it is definitely a sort of a slightly different demand. And then I think, Savan, you mentioned something which is, about being ready for it and actually the readiness for this stuff. And, I think there are still some gaps in terms of our ability to be ready to take advantage of this. Have we got the right people? Have we got the right talent? Have we got the right financials in place? And actually, do we have the right data to understand what it is we're trying to fix in the first place and not end up making a bit more mess? So I think there is a readiness aspect to it as well. We do see people or businesses and the one that you're alluding to, Mike, so we were on a panel sort of this time last year, I think, talking about it. And I remember sitting on an AI panel thinking, blimey, I've got no right to be sat here when he's talking about this functionality. I think if you're starting from that point, it's a much easier place to take advantage of it than if you're trying to maneuver your business to that point, which comes back to that sort of readiness aspect.
Definitely. And how sort of data savvy do you think MGAs are? You've mentioned data a few times there, Jamie. Are they really making the most of the data they've got their hands on? Do they need to get their hands on more data? How do you think that is at the moment, that lay of the land?
So again, I think it's the same as everything. There are shades across the spectrum. So do I think that MGAs are data savvy? I think it's one of the tools in their toolkit that they can utilise. So understanding, their market, what they're writing, what they should be writing, what they're missing. So I think, MGAs are historically rich in data. And I think good MGAs know how to utilise that data to help improve the business. Do I think they monetize that in a way that they could? Probably not. I think there's more that could be done there in terms of, utilising that data to genuinely drive trends and behaviours as opposed to quickly respond to trends and behaviours. And I think, as an industry, we're big enough now to probably, be movers, not just responders to that. I think MGAs are definitely sat on a data gold mine. Have we got the tools to dig it up? Question. I think some have, some haven't, but not dissimilar, I think, to most of the industry, which is, there is a huge amount out there, but, are we using it to its best effect and for reasons that make sense? I think we're probably at a C on the scorecard as opposed to an A.
That sounds perfectly fair. Just before I crack on with the next question, just a reminder to everyone who, if you want to put a question to the panel, do use the Q&A function, and I will make sure to save a little bit of time there to go through them. But no conversation about insurance is complete without touching on regulation. And obviously, it's quite timely at the minute because the FCA has launched a review into the impact of AI, which is obviously what we're chatting about at the minute, on retail financial markets and regulators. I think the deadline for comments for that is the end of this month, actually. I just wondered if you guys had any predictions really over what this piece of work could unveil and perhaps the impact on UKGI.
I think regulation's always the one that people sort of take a sharp intake of breath, don't they, Mike, before anyone goes first. So look, so I think it's really, really important that the regulator has got an interest in this area. So, if we talk about AI specifically, it is powerful. I think the industry does need to be thoughtful about it, and we do need guardrails. How would I expect it to come out? So I expect the emphasis to be on transparency, the ability to explain, and fairness. So, showing what are we doing in this space and why are we doing it and why is it a benefit? I think it's probably vital we get on the front foot now. So whilst we recognise that probably adoption of this stuff is not as inherent it is in other parts of people's lives and our lives, I think being at this stage is really important, and it means that at least the regulator can start taking a balanced and proportionate view that's relevant to the industry. But also I think it gets up, get on the front foot around some of the wider concerns that come with it. So things like algorithmic bias, things like, opaque decision making, like how has it come to those conclusions? And let's stay away from some of the more controversial bits about AI, right? Not for this forum, but I think the technology is moving quickly. I think it's becoming financially more accessible, and I think there is a real push and a drive to utilize it. So having a regulator that is actively interested in this for the right reasons, that's proportionate and gives balance in terms of oversight as well as supporting innovation, I think is really important. But I think we just need to remember it's not the AI that's the risk. It's, ungoverned AI that really is the risk. So I think we need to look at this in a really balanced and proportionate way, but recognise the sooner we do it, probably the better.
Yeah, I think we'll be contributing it on behalf of our members. I think the key thing is, from a regulatory perspective, is that the sector, the industry needs to engage with this review, because if they don't engage and therefore ensure that whilst this review has been undertaken, that the regulator gets full transparency on what we're doing as a sector, how it does drive good customer outcomes, etc. If we don't do that and engage, then as always, things will be done to us. Right? So it's so important to share and have a collaborative approach. Because obviously when the regulator, when it does this review, and obviously I think this is just the start point, I think we can expect further things post that, unless we have that collaborative approach, then effectively we're in danger of the regulator perhaps seeing things which aren't quite correct and making decisions on that. And therefore I think we all have an obligation to inform and collaborate to make sure we get to the right outcomes.
Yeah, because I think sometimes things that probably feel simple, when it comes to the sort of practical utilization or implementation of it, it isn't necessarily as simple as it can be. And I know we are trying to simplify some of those areas. But back to your point, Mike, I think it is really important for that engagement. I think not engaging sort of probably ends up in the worst of all scenarios. Back to that sort of done to. Because in order for it to work, there needs to be clarity, and trying to avoid some of the complexity that's come previously.
I totally agree. I also, Jamie, I really like what you said about ungoverned AI being the risk. I think that is absolutely right. Like, I think we definitely need guardrails, and I think the sort of, regulation and looking into all this is a really good thing. I don't see this as actually curbing innovation at all in the insurance space. I think it's just going to help shape what it might look like, and also give people confidence to use AI in the right places and make sure that it's not, Jamie mentioned bias, but other things like hallucinations, and these are all risks. And we want to make sure that if we're going to use technology and AI, it's to improve customer outcomes, not to like negatively impact it. And sort of we need to make sure that we're also just using AI where it should be used with the right guardrails in place, and having a mixture of AI and other tools so that we know it's going to do the right thing is just incredibly important.
Yeah, definitely. We have had a question come in actually that's around sort of that regulatory AI take, so I'll throw that at you guys now. But Isabella has asked about with sort of the softening market and the PRA's heightened focus on carriers and their oversight of delegated authorities, this could drive more information being requested from MGAs. Could AI help to manage this, and are carriers open to its use in this perspective, in this way? Anyone have a take on that?
I can speak from my perspective as an MGA engaging with carriers as opposed to carriers, if that's helpful. So again, I think it comes to really practical examples of, and the explainability that I mentioned earlier, not even just from a regulatory point of view, which is, what are you using, why are you using it, what's the outcome for that, to the point about more and more information being requested. I mean, that is just a theme right now, quite rightly, because I think, we do have to be able to demonstrate and sort of action those requests. And quite rightly, we are an extension of a carrier. They are trusting us with their capital, and how we utilize that. We are at the behest of the carrier to make sure that we're able to respond to those. But I think there are tools that can help that. But I think, I've mentioned it previously, there's no point doing that after the event. It should be part of the practice. You should be thinking about these things up front in all of the areas that you are needing to run reports or give data or give insight or respond to requests from your carriers. So I think it's there are, the engagements we're having is really, really positive, but there is an expectation that the AI is not making the decision. It's the underwriters that are making the decision. These tools are there to help the humans be more human. The underwriters do more underwriting and remove some of that friction, and as you say, help maybe with faster, quicker responses to data requirements, etc., etc. But look, I think the whole industry is still in a relatively early stages of understanding A, what this really means in reality, and B, how we can utilise it to its best effect and for the reasons that it was designed for, not necessarily the reasons that it wasn't.
I do agree, but I do think that sort of in terms of carrier openness, I think we're starting to see a bit of a shift in how that plays out. So as long as there's really clear like governance and audit trails and having some explainability around how these processes work, I think there's sort of increasingly positive sentiment around how MGAs can use AI to kind of improve transparency and control, and sort of in many cases a well-governed AI enabled process, as Jamie said, not like totally AI, but like AI enabled, is actually sort of more desirable than a very slow manual one. And if AI, which it can, like help MGAs cope with the burden of increasing amounts of reporting and transparency, then that's actually, I think, a real benefit to carriers too.
Katie, just very, very quickly, just something that I think was really relevant to what we're discussing. In our AI claims report, we asked the question, what would increase your willingness to adopt more AI tools in claims processing? And then the top three that stood out to many of the areas that you've mentioned already, but proven accuracy and performance metrics stood out as the leading factor. Then it was integration with current systems, and then it was more transparency in how AI decisions are made. So very much in line with what we're discussing.
That's really interesting. Jamie, do you have something to add?
I was going to say, I think the first part of that, though, is probably the most important and the most tricky, which is that sort of data aspect of it, because actually that's probably where the biggest challenge and the biggest opportunity comes in.
Yeah, completely agree with you there. And probably got time for one more question to throw at you guys. Obviously, where we're touching on regulation, the FCA has been pretty busy, I think we can all agree, over the recent years, working to simplify its rulebook and regulations across the market. I just wanted to get your general take really on this work to date, in terms of whether you think it's hit the mark, or if there's any unexplored areas that still need to be looked at, in your opinion, to be beneficial for the market and in particular MGAs.
Just pull the pin and roll the grenade there, Katie.
It does, yeah.
That's just part of the job, Mike. Part of the job.
No, I think it's a start. Okay, number one, I think some of it was low hanging fruit. I think from that perspective, I think from a association and membership perspective, not going ahead and let MJs being sole manufacturers was my view, lack of innovation, perhaps the lack of sort of, where the market is developing and the expertise. But to be fair to the regulator, that's something we're still in conversation with on behalf of our members to really understand why they took that decision not to do it. And I think I've got an idea, but we'll come back to our membership from that bit. So I think in the round, I would say it could have been a bit more forward thinking. But again, at the same time, I think we have to recognise that the speed in which the regulator moves, and let's be grateful in terms of the things which they did do and recognise that. But I think my general sentiment, they could have gone a bit further in some of the other areas. That would be my take.
Yeah, I mean, I just concur with that, which is I think the direction's positive, the intention's definitely good. But I think I mentioned it earlier. I think sometimes simplification doesn't always sort of simplify things in the real world. So there's probably still more to go at, but definitely moving in the right direction.
Great, Sasha. Anything to add?
I just agree. I don't think I have anything else to add to that.
No, perfect. Sav, did you want to add anything to wrap things up?
Yeah, just quickly, a little sneak peek of many of the insights coming out in early March on the kind of commercial lines and personal lines market. But we did ask this question, how do you perceive the current regulatory environment in the UK insurance market? 51% felt that it was balanced. 3% felt it was too lenient, and 43% felt it was too restrictive. So, of course, we'll be exploring that in much more detail in the report, and I'm sure we'll be talking more about what that means and what more the regulatory bodies can do.
A great way to conclude today's webinar. Thank you so much. Thank you to all of my panelists for joining me today. That hour absolutely flew by. You've been absolutely fascinating to chat with. Thank you so much for giving up your time to chat to us all. I hope everyone at home or in their offices enjoyed it as well. And thank you for your time. We'll see you at the next one.